Welcome to AGORACOM, the Small Cap Epicenter, and AGORACOM TV, a daily, fast-paced, edgy show that brings you the best press releases out of the small cap world every morning at the open, so you can hopefully profit from them and maybe even find your next great small cap investment. Now, it's Wednesday, November the 14th. We've got more great small cap press releases for you from both sides of the border, ranging in all industries. So what we're going to do to make sure the show doesn't run too long is keep these things really brief and concise. So get your pens out, start writing down these stock symbols or the ones you're interested in, or at the end of this, make sure you tune into our blog where I'll post these for you and you get more information. Let's start off first in the U.S. SOYO Inc. trades on the OTC under the stock symbol SOYO. They reported third quarter 2007 financial results, and the numbers were big. The company announced earnings, that's profits per share, of 5 cents per share for the quarter. That equated about $2.4 million in profit. That's versus $264,000 in profit for the same quarter last year. Big growth there. Revenue for the quarter, $33.4 million. That's up 234% from the same quarter last year. What do? They're a provider of consumer and computer electronic products. Specifically, it looks like they're an innovative provider of LCD monitors, LCD TVs, Bluetooth portable storage, and LCD furniture. Haven't heard of this company before, but with those kind of numbers, you've got to take a closer look at SOYO. Next up, still staying with the OTC, Emergent Group, trading under the stock symbol EMGP. They reported record third quarter sales and earnings per share of 8 cents per share for the quarter. They're a provider of mobile medical lasers and surgical equipment. Revenue for the quarter is up 12% to a record, as we said, $4.467 million. Profit, $430,000, translates it to 8 cents per share. That's compared to about $445,000, 8 cents per share for last year. So profits stayed the same, but revenues were up, and that's a good sign. We've got a quote here. What they do is provide mobile laser and surgical equipment on a per-procedure basis to hospitals, outpatient surgery centers, and physicians' office. So what it sounds like here is this is a company that fills in the gaps when hospitals or physician centers are short of equipment. Looks like Emergent Group comes to the rescue, and given the state of affairs in U.S. healthcare system, you know that Emergent is probably doing pretty well. They're trading right now at $3.40. Over to the TSX Venture Exchange, Pearl Exploration trades on the stock symbol PSX. They announced financial results for the quarter and year ended September 30th, 2007. What I'm going to go with here are the numbers for the year. Revenue, $73 million. Net loss, big net loss, but I want to discuss this, just under $44 million, so still a big loss there. And total assets about $654 million. Right now, as of the end of the quarter, their total net production of both oil and gas, when converted into barrels of energy, turns out to be 9,093 barrels of energy. That's up 15% sequentially. They're now up to 2,500s of barrels of energy, which represents a 520% increase over last year. Now, normally a big loss like this, $44 million, would be too much, and we normally wouldn't report on it. But the company this year this quarter raised $170 million to support their continued acquisition, exploration, and other operations. So obviously on the right track. And when you've got Jim Rogers and JF Tardif talking about $200 oil, this is definitely something to keep looking at here. They're trading at $299, which is way off its high of $620. This 52-week high of $620, and that big loss probably explains it. So if they can find a way to pare down some losses and keep increasing revenues, Pearl may be a stellar company to come. But you've got to take a closer look at that. Next up, Automated Benefits trades on the TSX Venture Exchange under the stock symbol AUT. They announced that they surpassed $100 million in paid claims going through their system, cumulative claims paid through the AutoBen system. Revenue for the company obviously is tied to the amount of claims that go through the system. And if you're not familiar with this, what I like about companies like this is they're taking the old-fashioned healthcare insurance system, which is very manual intensive. It involves a lot of paperwork being signed at the doctor's office, being sent to insurance companies, then being sent back to patients and the actual doctors themselves. way too long of a process, way too manual intensive. What automated benefits and other companies like them have done is make the system electronic, and it actually resolves the claim on the spot in real time. So when you talk about over $100 million in paid claims gone through, obviously automated is doing very well. And I've got a quote here from John Jackson, the president of the company, who says that the Canadian market is approximately $11 billion annually. So they've obviously got a lot of room to grow. And I think companies like them will, not necessarily automated benefits, you got to do your research, they may or may not, but companies like them are definitely going to be the wave of the future. They're trading right now at 21 cents. Next up, Painted Pony Petroleum trades on the TSX Venture Exchange. They've got Class A and Class B shares. Look up PPY.A and PPY.B. Their Class A shares are trading at $2.90. What we liked about this press release, they announced a $10 million bought deal. The syndicate was led by Blackmont, First Energy, Westwind Partners, and Cormark. Looks like they're going to trade. They're going to take the stock out at $2.40. So a bit of a discount there, which is fine. And it's a bought deal, which means that's done. They've taken that cash and they've paid it off to the company, and then the syndicate is going to distribute it as they see fit. But you're talking about $10 million. We don't know a lot about the company. It went public in May of 2007. What we do know, their Petroleum tells you a lot, and they're exploring in southeast Saskatchewan and northeast British Columbia. And again, with a lot of people, with major pundits now talking about $200 oil, you've got to pay close attention to companies like this who are able to raise $10 million at the snap of a finger. Next up, Shear Minerals and Stornoway Diamond. They recovered a 5.3 carat diamond on their from their Churchill Kahuna Kimberlite project. Shear Minerals trades on the TSX Venture under the stock symbol SRM. Stornoway trades on the stock symbol SWY. And what they're telling us there, the diamond is a broken fragment of a larger stone, which is estimated to have been up to 14 carats in size. The Churchill Diamond Project is owned 58% by Shear and 42% by Stornoway. And it includes diamond rights to explore more than 2 million acres. And finally, Goldbrook Ventures trades on the TSX Venture Exchange on the stock symbol GBK. They announced that one of their holes intersected 18.5 meters of 1.4% nickel, 0.7% copper, and 3.23 grams per ton of PGE and gold. That was drill hole number 23. These are initial drill results. There are more assays to come. But this particular hole, this intersect here, was at about 100 meters in depth. Includes 5 higher grade intervals of massive, semi-massive, and heavily disseminated sulfides. The company's trading right now at 42 cents. That's a wrap for the day. Some great news. Hopefully you absorbed it all. If not, don't worry. Make your way over to the blog or just replay the show again. But make your way over to the blog where we're now posting these on a daily basis where you can actually get the information and maybe even contribute. Otherwise, if you want to take a look at more great small cap companies, don't forget about the AGORACOM marketplace. Over 75 small cap companies divided by industry and exchange, so you can find the ones best suited for your portfolio. That's a wrap. Have a great day. Talk to you tomorrow.